Hi, good evening, everyone. My name is Gerald, and I'll be your host for today. We are very pleased to have with us for tonight's Corporate Connect, UOB. We are very pleased to share that tonight's webinar is organized by SIAS and supported by the SGX Group. We are also very pleased to welcome the audience from Mumu Live. So I think UOB doesn't require much introduction. It is one of the leading banks in Asia, and we are very honored to have with us the investor relations team from UOB Group to be joining us tonight. Before we go into the sharing from UOB, what we'll do is to have a very quick market update. This will be from Mr. Isaac Lim, who is the Chief Market Strategist for Mumu Singapore, before we go into the corporate presentation by UOB. So without further ado, I will hand over to Isaac, who will share with us the market updates.
Hi, Gerald. Thanks so much for the introduction. Just want to be sure that everybody can hear me and see my screen, right? Okay. So hopefully you guys are able to hear me and see my screen, right? So good evening, everyone. Thanks so much for joining us at tonight's SIAS Corporate Connect. I'm not going to take up too much time, so let's get right into it. Very quick update on the markets as to where we're standing and what we expect to see, right? So I will just go right in. Now, first and foremost, let's start off with the US markets. Today, I'm just going to focus really mainly on US, what's happening in the Chinese markets, and also how Singapore STI has traded today. So, US equity markets rebounded strongly last week, right? That's really because President Trump, actually talked about giving a break, sort of a 90-day break from the tariffs, except for China. And at the same time, over the weekends, he did talk about, exempting the semiconductor and also the tech sectors over from the tariffs. But of course, he has recently flipped on that again just yesterday. But nevertheless, the S&P and Nasdaq futures both pared their losses by about 7.67% and 9.99% respectively. Another thing that helped boosted the relief bounce last week in the U.S. markets was really the fact that U.S. CPI numbers came in lower, uh, showing that there was still inflation, but inflation rate was actually slowing. So disinflation, in fact, and that was something that was actually quite welcome by the market. So you can see this screen grab that I took over here. Right. The previous reading was about 3.1 for core CPI, right, month on month. And then the latest results that came out last week was actually 2.7. So over the past 3 months, since January, since the start of this year, inflation actually has been slowing. And taking these numbers into account and ignoring everything else, right? This actually then shows that the U.S. Federal Reserve is actually um, on in progress, right? Following the right timeline in cutting rates, and the markets are actually expecting at least one rate cut by July this year. And moving on, we also see that earnings season for this quarter has actually kickstarted. Results so far has really been pretty exceptional. Over in the US, they traditionally start off with the financials, and we see banks like JP Morgan, Morgan Stanley, BNY all beating analysts' expectations. So that has sort of buoyed the markets. But the market is not without its headwinds and without its volatility. Over the course of last week, we saw that the US dollar actually fell sharply given the impact on tariffs and deteriorating investor sentiments. Markets did find a sort of a break over the weekend, as I mentioned earlier, when Trump exempted semiconductor and tech sectors from the tariffs. What was interesting also, however, was we saw a bond market rout late last week, which spooked both investors and institutions. And there are talks that the sell-off in the U.S. Treasuries was really more due to the Bank of China, PBOC, the Central Bank of China, and possibly also the Bank of Japan, seeing that the sell-off, the highest volume actually came in during the Asian hours. With bonds selling off in the US, the dollar losing its safe haven status temporarily, right? Gold prices soared as investors look for a place to actually reallocate their capital and to protect their portfolio, right? So gold prices soared and reached new all-time highs. So that's for the US markets. One of the things that was really quite concerning is that um, the US markets was actually behaving a bit more like an emerging market economy last week, right? When there was the bond market rout. Normally, when there's so much volatility in the stock markets, investors tend to actually allocate their capital towards the government treasuries, right? But the fact that the markets was actually dumping both the US dollar and the US Treasury bonds really showed that the investors' confidence in the US economy as a whole has hit sort of a new all-time low, right? So there's really more from a sentiment perspective. Moving over to the Chinese markets, Chinese equity tanked last week, right, but managed to end the week stronger. This is really because they were pricing in the negative news of the tariffs, the tit for tat tariff show. Um, the the prior week when the Chinese markets was actually closed for a public holiday. So Hang Seng fell by 8.54%. At one point when the market opened, it actually dropped by, I believe, about 16%, and that was the last time that the Hang Seng actually fell that much was all the way back in 2008 when there was the global financial crisis, the GFC meltdown. CSI 300 was a bit more buffered. They closed higher by 2.05%. Now, this is really because the onshore Chinese market index, is a bit more closed, a bit more protected from external shocks, not as open as the Hang Seng index. So despite the tit for tat tariff show, stock markets actually showed a late week rebound, just like the US markets, because President Xi announced an ASEAN tour visiting the three key countries, Vietnam, Malaysia, and Cambodia. At this time, I believe he is still in Malaysia. Now, Vietnam, Malaysia, and Cambodia will, if you guys remember, when Donald Trump first announced his wide-ranging tariffs, Vietnam and Cambodia were on the list for those that had the most tariffs levied on them, right? So, with President Xi actually making a huge announcement to say that, okay, I'm going to visit these three countries, these meetings actually have strong economic and political signaling effect, right? So what this really means, is that presidency is trying to present China as a stable and dependable economic partner in a very large contrast to what many in the region perceive as an increasingly unpredictable US approach. One thing that I also found quite interesting was that this presidency's visit to these ASEAN countries, right? They actually put aside the dispute that they have been having for the longest time over the claims of the South China Sea, right? So if this meeting goes well, right, the world could very well be looking towards China as sort of the next leader in the global free trade arena. So that's more from the Chinese market side. Moving over to closer to home, right? This is really a summary of today. Today, the STI actually rose by 2.14%. Overall, we had 26 shares advancing, three shares lagging, one unchanged. Wilma actually declined the most by about 1.9%. However, overall, financials actually finished today the strongest with UOB up by 3%. And I think our listeners will be very excited to hear from the investor relations team at the UOB site later, a peek into what they have to share with us. More recently as well, this week, MAS also announced an easing in the nominal effective exchange rate, right? they announced a slight easing in the slope as they see risk to inflation being tilted towards the downside. MAS also did write in the report that imported and domestic cost pressures will continue to remain low, and the core inflation that MAS is forecasting is expected to stay well below 2%. This is very much in line with what the MTI has also recently talked about in their 2025 GDP target report, right? Even though inflation in Singapore is not expected to be very high, right? Expected to stay well below the 2% range. However, given the trade tensions and the volatility and the unknowns of the geopolitics brought on by Donald Trump and his tariff tantrum, MTI actually revised the 2025 GDP target lower to 0.0 to 2% by the end of this year, right? This is down from the previous 1 to 3%. So definitely a bit of slowing growth in the Singapore GDP. One more news that I didn't manage to add in here is that, as I'm sure you guys will already know, Parliament has been dissolved as of today, right? So nomination dates have already been announced. Polling day has also been announced. That is something for us to look forward to. I did a quick study with regards to elections, local Singapore elections, and the STI. I think all the listeners will also be happy to know that the given from history, right? There isn't really a lot of correlation between what's going on in the elections and how it impacts our Singapore markets, right? So I think that's really because the results have been how it is since historical time. But enough about politics, right? I'm just going to show a bit of the heat map. So this is the heat map for STI today, right? We're seeing green across the board, as mentioned, with only Wilmar being the only laggard, and then the financials doing really well. Right, so I have about 2 minutes. I just want to quickly point out that, for the investors that are listening in, one of the things that I think that investors really should be looking out for is actually this chart, right? This chart right here. Taken from Bloomberg, the latest surge in the US 10-year yields really rivals historic meltdowns, right? So what we have this last week's tariffs U-turn, or rather the start of this week, is very much in line with what we see back in the 2000, where we had the 9/11 terrorist attack and even the dot-com bubble. And back then, in the late 90s, right, we also saw LTCM collapse along with the early 80s stagflation, which then led into the Black Monday, right? So is there a cause for concern? I think we should still continue. Investors, especially in the US market, should be a bit more careful with what they're investing into. I personally have a preference for the Singapore market. Those that follow me on Mumu will know that I've been also advocating for a perspective change to build a robust and sound dividend portfolio. All right, so with that, I would like to wrap up the highlights for this week. Thanks so much for listening to me, and I hand it back over to you, Gerald.
Thanks so much, Isaac, for sharing your thoughts and providing us with updates on the markets. Without further ado, we invite the team from UOB to be providing with us an update on the company as well. We are very pleased to have with us today Priscilla, who is the Vice President of Investor Relations at UOB Group. We also have with us Jasmine, also Vice President at Investor Relations at UOB Group. So we'll start by having maybe Priscilla provide an update on the company before we go into the Q&A section.
Hello. Yes. Thanks, Gerald. Good evening, everyone. My name is Priscilla, and I'm part of the Investor Relations team at UOB. Glad to have you all joining tonight. So I will first run through, next slide, please, the overview of UOB Group and our consistent long-term track record of execution. Then we will talk about the bank's medium-term goals and growth drivers. Finally, I'll be happy to take your questions during the Q&A session. Next, please. One more. Okay, so starting with this slide, this is just showing a snapshot of our group, some history and also financial highlights. So on the left-hand side of the page, I'll just highlight that we've been around for a long time. This year marks our 90th anniversary. And the founders' family have always been involved in the bank for the last 90 years. And our CEO, Mr. Wee Chong, is the third generation of the family running the bank. His family remains the largest shareholders with an 18% stake. And at UOB, we have established our presence in the region. We have the most diverse ASEAN franchise among the Singapore banks. Now on to the right-hand side of the page, just to highlight some key statistics from our 2024 performance. So as of the end of last year, our balance sheet remained healthy with strong capital and liquidity positions. We have also generated around 13.7% return on equity. So that's a healthy level of profitability. And with the implementation of Basel IV capital rules effective from July last year, our capital ratio, specifically the CET1 ratio, reached 15.5%. So this is an uplift of about 200 basis points from last year. And on the back of this capital strength, we have announced a capital distribution package of $3 billion, including a special dividend and also share buyback program, which I will share more later in the presentation. Now, on the bottom right-hand side, I just also want to highlight that we are one of the highest rated banks in the world. We have strong AA ratings from the three major credit rating agencies. You can move to the next slide. Okay, so this slide shows the main division of the bank. We are a full commercial bank with operations across retail banking, wholesale banking, and also global markets. And most of you would recognize us as a sizable player in mortgages, credit cards, and also deposits accounts. And in the wholesale banking side, we are a leading SME bank in the country. We've also been growing our corporate and institutional business over the years. Now, in terms of our market share in Singapore, our home market, we control about 21% share of Singapore dollar deposits and 25% in terms of Singapore dollar loans. Next, please. Okay, so this one slide here is about our growth story. Throughout the years, UOB has demonstrated a consistent track record of execution. So if you look from the 1965 until the current year, we've actually remained profitable year after year, even during various global crises and economic downturns. I will talk more on our solid financial track record later in the presentation. But over the years, we have grown organically and also inorganically through acquisitions, as you can see in this slide. And our most recent acquisition was the Citigroup consumer banking portfolio in 4 markets. So we acquired the portfolio in Malaysia, Thailand, Indonesia, and Vietnam. We are pleased to update that all 4 portfolios have been legally consolidated into UOB, and we've added close to 2 million customers from this acquisition. Next, please. Right, okay, so this slide shows you the comprehensive regional banking franchise that we have. The left side shows a snapshot of our regional footprints. So we are present across Asia with particular focus on Southeast Asia and Greater China. And then with the Citi acquisition that I mentioned earlier, we believe our franchise in the 4 Southeast Asian markets will deepen further. While on the right-hand side, this shows our true broad business strategies focusing on retail banking and wholesale banking. I will talk more about these strategies in the later section. Next. Yeah, so we have some slides here to demonstrate our consistent track record of execution, starting from the loan growth. So on the left chart, you can see that our loan base has increased by more than tenfold in the past 2 decades, while keeping asset quality resilient, as represented by the non-performing loans ratio on the right-hand side. This is also the ratio of bad loans compared to our total loans. So over the years, we have never compromised asset quality while growing our loan book. And if you look at the chart on the right-hand side, yes, our non-performing loan ratio was quite high in the aftermath of the 98 financial crisis. However, since then, we were able to clean up the book and be more prudent in terms of our risk management. So our NPL ratio have been maintained at a very low and stable level between 1 to 2%, despite various economic cycles we have been through in the last 20 years or so. Next slide, please. Now, this is a slide about our loan portfolio. I'll spend some time to talk about our loan book. Having a diversified loan portfolio is very important to UOB. In terms of sector or industry, on the pie chart there on the left-hand side, we are quite diversified. So you can see that real estate exposure represents half of our book, of which half is in mortgages. So in total, mortgage accounts for about a quarter of the loan book, and this is a resilient portfolio. So despite this concentration in property, the asset quality track record of this portfolio has been very resilient across multiple years, many years, with most assets located in Singapore. And then the rest of the sectors are pretty much diversified. Now, in terms of geography, you can see on the bar charts there, half of our loans come from Singapore, and the remainder is spread across Asia. Our key markets here are ASEAN 4. As I mentioned, Malaysia, Thailand, Indonesia, and Vietnam, which were also the markets where we acquired the Citigroup consumer banking portfolios. And then we also have Greater China and the rest of the world, which includes exposures to gateway cities such as New York, London, and some Australian cities. Our regional strategy is a bit selective in terms of targeting the customers. So we are not aiming to be the bank for everyone, but in the retail segment, we are more selective in terms of targeting mostly the upper mass affluent segment. And then in the wholesale banking side, we tend to target more of the large corporates with cross-border ambitions. And then last but not least, in terms of customer segments, GR represents 1/3 of our book. So this is the retail portfolio. And GWB, the group wholesale banking, represents the other 2/3. So after the Citi acquisition, we plan to bring the mix a bit more balanced between the retail and the wholesale portfolio, but it will be achieved in years to come. Yes. So next slide. This talks about our deposits. At UOB, our business is mainly funded by customer deposits. We've done multi-year of efforts and strategy to cultivate trust from our customers and build a strong deposit franchise. On the retail side, we aim to be the main transacting bank of customers, while on the wholesale side, we have been strengthening our cash management platform to serve the need of our corporate clients. In terms of deposit mix, on the pie chart there on the right, fixed deposit accounts for about 41% of the total mix, but our please. Next slide, about our profits and also income over the years. So our steady loan growth, backed by a steady funding, translate to resilient income and profit growth over the years. Even during difficult economic periods like the 98 Asian financial crisis, 2008 global financial crisis, as well as the recent COVID pandemic, you can see that we continue to post positive profits. Yes, the growth in our earnings may fluctuate for 1 or 2 years, but we always weather through this period, emerging stronger. Next, please. Now we've come to the exciting part of the presentation, which is to talk about dividends. Okay, so to reward our long-term shareholders, we currently have a policy of paying out 50% of our reported profits in dividends. This 50% dividend payout ratio strikes a balance between rewarding shareholders as well as capturing growth opportunities arising in the region. As of 2024, our dividend per share was $1.8. And special for this year, as I mentioned earlier in the presentation, because of our strong capital position, we also have announced a 3 billion capital distribution package comprising of a special dividend of 50 cents per ordinary share to be paid out over 2 tranches this year. And we also have a $2 billion of share buyback program. This will span over a period of 3 years. So as long as we maintain our profit growth trajectory, shareholders who stick with us can look forward to higher dividends over time. Now moving on to talk about our medium-term goals and financial shape. Can we go to the next slide, please? Yeah, so this slide talks about our medium-term goals by 2026, which we also shared during our corporate day, which we held in Kuala Lumpur last year. It was a big investor event for us. So before I go on, please be mindful that due to the recent market developments post-tariff, there could be some revisions to our medium-term growth targets. So I may not emphasis on the numbers shown in this slide. However, our focus and directions remain intact. So broadly, our strategies aim for three things. One, we aim for higher income contributions from ASEAN 4. While the recent tariff news may slow this pace, we expect the short-term shocks, yes, but we also see opportunities for the region to emerge stronger. So we continue to believe ASEAN will continue to be a global trade hub, and we focus on serving our customers here. Number two, we aim for a higher mix of non-interest income towards wealth, cards, and customer treasury income. So while consumer sentiment now may be affected by current uncertainties and this may dampen our card fee income. However, on the wealth side, we believe that Singapore's safe haven status will continue to attract wealth flows from the region. So this could be benefiting our wealth management business. Additionally, rising demand for hedging and also trading from our clients amid the market volatility could also grow our non-interest income. And next, we continue to improve our cost efficiency and productivity with expenses shifting from people towards technology. Now, I'll further expand on our business strategies, specifically in wholesale and retail banking. This slide shows the wholesale banking strategy. So this may look a bit busy, but let me focus your attention on the middle part where it talks about our strategy. As mentioned earlier, I won't emphasize on any growth targets here. Okay, so in wholesale banking, our aim is to be the number one cross-border trade bank in ASEAN, benefiting from growing trade and investment flows into and within ASEAN. So we focus on connectivity business across the region. Over the past decade, we've invested more than $800 million to beef up our capabilities and platform. And over time, our wholesale banking business should pivot towards more trade, cash management, and treasury business, so away from our traditional real estate lending. This should diversify our business and our earnings. While global trade dynamics now are shifting due to the new US tariff policies, we believe countries will adapt over time. So within ASEAN, we may increase trade with China and other economic blocs outside the US. And we believe the ASEAN potential in terms of being one of the global trade hubs will continue, and we will still follow our clients and serve their needs in this area. So we still think there are exciting opportunities to capture here in the longer term. Next slide talks about our retail banking strategy. Our ambition here is to be the bank of choice for aspiring ASEAN individuals. So as we know, ASEAN is home to over 650 million people, with more than 60% in the middle class. So we have a young population and also a rapid urbanization supporting a growing consumer affluence. And at UOB, we now have about 8 million retail customers. So there's a lot of potential here. For retail banking, our focus will be on wealth and card business as the key drivers. We aim to provide wealth management solutions to our customers throughout their different stage of life. And if you're a customer of UOB, you know that we offer our customers, we serve them both digitally and also using the physical channels. We also see opportunities to serve the high net worth customers in our private wealth segment, benefiting again from Singapore's position as a leading wealth management center in the region. Next, we also want to serve our customers' lifestyle needs and wants. And after the Citi acquisition, we've boosted our lifestyle offerings through our cards programs. So if you recall, last year we brought world class concerts, which is the Taylor Swift, where we were the exclusive bank partner for our customers in the region. We will continue to improve our lifestyle offerings along the travel, entertainment, and dining space. So next slide, just to sum up everything that we've talked about our track record, our medium-term goals, and our strategies. You might be wondering, so why should I invest in UOB? Okay, number one, we have a stable management. As an owner-operated bank, the interests of management team are aligned with our long-term shareholders. And then number two, with our diverse footprint in Southeast Asia, we give investors the upside of growth opportunities and rising affluence in the region, while at the same time applying prudent risk management and also Singapore standard of government corporate governance in doing business. And last but not least, we are a bank that has consistently weathered through numerous up and down in the economic cycle and downturns over the past 90 years. So we have been delivering very stable on the growth, earnings, and dividends. So this wraps up my presentation. I hope it has given you more comfort in investing in us as you learn more about UOB and what we do. Thanks for listening. Back to you, Gerald.
Thanks so much, Priscilla, for giving us the update as well as some of the key reasons why we can consider looking at UOB. We're now going to the Q&A section of tonight's Corporate Connect. So for those of you who have joined us tonight, if you have got a question to ask, you can actually put it into the Q&A box, and I will be taking these questions to be asking the investor relations team of UOB. Okay, we'll start with this question that's probably top of the mind for many who have joined us today. I think over the past 2 weeks, what many investors are talking about would be the impact of Trump's tariffs. The question from George would be, how will this potentially impact UOB, and how significant do you expect the impact to be?
Yeah, so I think the impact from US tariff policies remain fluid while negotiations between countries, are underway. There's no doubt that it has caused volatilities in the global financial market and impacted business confidence. In the near term, we expect disruptions and slowdown in global trade and investment flows. However, we believe that given time, the countries will be able to adjust, and post tariffs, we might be looking at a multipolar world. So, countries will have less reliance on US market and on US dollars. So we believe after a period of this adjustment and transition, global trade volume will resume its growth in the new world. Now to talk more about the impact to ASEAN region and Singapore as well as UOB. I think for ASEAN itself, yes, we'll see the short-term shocks, but I think we also see opportunities for the region to emerge stronger. So what we think will happen is that there will be a diversification of trade partners. ASEAN will trade more with China and with other countries. So currently, I think China already has been the ASEAN's largest trading partner since the last 5 years or so, and US is number two. But we expect ASEAN to trade more with, for example, Japan, South Korea, Europe, Middle East, Australia, all the other regions of the world. And within ASEAN itself, the countries will trade more with each other to reduce dependence on external markets. So this is how we think that the world will shift into, especially with regards to our ASEAN region. Then on Singapore, we might be less less impacted by the direct US tariff risk. But because Singapore is a small and open economy and we are heavily reliant on trade, it makes us also vulnerable to global trade shocks. Like Isaac mentioned, the Ministry of Trade has actually revised down our economic growth forecast for Singapore to just a 0 to 2% range. So while growth is slowing down, we will continue to be vigilant and also look at the developments, especially also in the labor market in Singapore, because this may impact our consumer portfolio. And for UOB, the immediate risk that we are seeing is more tilted towards growth rather than asset quality. If anything, I think credit growth will be very modest. There will be hardly any capex loans because already our clients are adopting wait and see approach. They would rather not invest in a big way for the time being. So capex loans will see a slowdown. And then our trade loans will also be impacted. Trade loans currently account for 10% of our group loans. So this, in the short term, we'll see a slowdown. And trade loans will pick up if these trade flows have been redirected. But in the short term, I think it will still be uncertain. So definitely we will see the impact to our credit growth. Now, in terms of asset quality, I mean, some investors may be worried that we have direct exposure to some of these US exporters. So we are currently undergoing this portfolio review within the bank. We are conducting this review and stress test. One is to the direct exporters to the US, which we believe our exposure there is not that big. But number two, also the indirect exporters to the US, meaning the suppliers to US exporters. And now the results of the portfolio review is not out yet. However, we think that our exposures are more indirect, meaning the suppliers of these exporters, and some of them may be SME as well. That said, our portfolio has always been diversified. You may recall the chart that I shown that across markets, across the industries, we have diversification in terms of our loan portfolio. Hopefully, this helps to cushion the impact of any policy shift with regards to the tariff. And then our SME exposures are also diversified. And many of the SMEs that we support, they have clients relationship across also very broad, so they just not support one exporter only, but they support many exporters, so their risk will be lower. And overall, SME accounts for about 10 to 12% of our loan book, so it's not a very big portion. And the asset quality pressure will also depend on the regional FX stability. I think we are expecting ASEAN government to have a coordinated response across tariff negotiation, across the central bank coordination, and potentially they may give stimulus to the economies. Just like the COVID situation when we had the pandemic. So under such a scenario, we think that the asset quality risks are likely manageable. Having said this, I think due to current uncertainties, we are also likely to take prudent approach to top up our provision buffers. And I think overall, that's probably the direct impact. Some people may also ask, what's the opportunities from all this, right? So we may see some opportunities in the non-interest income kind of growth drivers. So we say that our credit growth will slow down, but however, in the non-interest income side of things, the current market volatilities could drive more hedging, more trading demand. So our global markets, our treasury business may benefit from this. And in the wealth management space, we are seeing clients also shifting money towards the safer assets. So they may pick the money market funds as their investment right now. So we are seeing some good traction on that as well. And if interest rates do move lower, there could be more opportunities to offer broader wealth management kind of products. So maybe I'll stop here, Gerald, and if is there any follow-up question or any other questions that I can take?
Thanks for the very detailed answer around how the tariffs can potentially impact your business. Maybe I'll just delve a bit further into what you shared. One of the potential opportunities that you highlighted was how UOB can tap on some of the trade flows within ASEAN. So maybe for those of you, for the participants who might not be as familiar with the business and UOB's positioning within ASEAN, can you share how this can potentially be done and why UOB is in a good position to tap some of this?
Yeah. So as I mentioned, in terms of our footprint geographically, we are focused in Southeast Asia. So of course, our home market is Singapore, but Southeast Asia is also within our backyard, right? So this is a market that we have invested a lot in in the past many years. So connectivity business between ASEAN and Greater China, as well as within ASEAN itself, it has been the key growth drivers of our wholesale banking business. And now we may see the trade flows being redirected. I mean, ASEAN may not trade so much with the US anymore, but we will continue to trade with other parts of the world. So it remains an opportunity that we can capture where we facilitate the trade and investment flows from these ASEAN countries wherever they want to, whoever is the trading partner, we can continue to serve our corporate clients within ASEAN, which have cross-border ambition. So this has always been our strategy in the wholesale banking space. So when we go to the region, we are actually a bit selective. So we don't try to be a bank to everyone. And in the wholesale banking space also, we tend to bank more the corporate clients with cross-border ambition because our geographical footprint actually gives us advantage to serve them not just in one market, but in multiple markets across ASEAN. So I think this strategy will still continue if ASEAN will remain as one of the trade hubs of the world. Where we see our customers redirecting their trade and investments, we will continue just to follow them wherever they want to trade, whoever they want to trade with, and wherever they go. I mean, in terms of their trade flows and investment flows.
Then just to add, right, I think the past few years we saw all this, supply chain diversification kind of story. We have also spent quite a lot over the past 8 years to actually invest in our trade management as well as our supply chain and cash management capabilities. So I think right now we are on par or even better than some of the global banks offering all this service, and our connectivity strategy has been playing out pretty well. So I think overall we don't see that trade will fall significantly. It's just how it will be adjusted and realigned across the global world. So I think it's something that we are watching and we will be working towards together with our customers. So our strategy doesn't change.
Okay, thanks, Jasmine. Just as a follow-up question, I think you mentioned the strategies both from a short-term as well as a long-term perspective. This is a question from Lynn. When you're thinking about short-term, what is the time frame that we are looking at? Is it a few months? Is it a few years? How do we think as the demarcation between short-term and long-term?
Okay, I would say that short-term will be, of course, the 90-day period where, Trump now pausing the tariff, right? So whatever negotiation that will take place within 90 days, then what will happen in terms of like maybe he wants to reduce some of the tariff to certain countries. So that's on the short term. But I think it may also be longer because these negotiations that are underway, we don't know how long they will take. So maybe in terms of saying short term, it'll be a period of 1 year or so. Then when we say longer term, our medium goal, term goal usually is like 3 to 5 years kind of time period.
Okay, one of the points you mentioned earlier was how clients are adapting to their different positioning, say the purchase of money market funds while there's a lot of volatility in the market. This question from AC, what is your strategy for wealth management, as well as offerings to different client segments within wealth management?
Yeah. Okay, so our asset under management, so we disclose this in our presentation deck, is about 190 billion Singapore dollars. So this AUM will be split in terms of deposits and investment. So currently about 40% invested. And we serve multiple segments of clients here. So mostly is the 2 million and above kind of AUM. We call it the private banking clients. And then the 350,000 Singapore dollar AUM ticket size up to the 2 million. So these two segments represent like half of our total AUM. And we do have a different strategy to serve the different clients. So for the private banking clients, usually we will serve them with a RM. But for the smaller clients, I mean, with the smaller ticket size of AUM, we have our digital banking app tomorrow. where actually for if you are a client of UOB, when you open the Tomorrow app, you can also see our CIO house view. So how you should invest, you can also get some advice from it. So this strategy is to make it accessible for individual customers when they want to transact and invest, get some advice. It's all can be accessed within their fingertips, so through the mobile phone. And when they want to do transactions, buy mutual funds, buy money from market funds, it can also be done through the Tomorrow app. Then I think for overall our philosophy in terms of wealth management is for the wealth preservation approach, meaning that we tend to be more conservative in like giving advice to the clients. We may not be the one like recommending aggressive stocks or like even cryptocurrency. So UOB has never done those. And this wealth preservation approach means that we want to grow clients' wealth sustainably. So this could be a bit unique where you might not see it in the other peer banks offering the same wealth management kind of advisory program. So hopefully it creates a differentiation in terms of our wealth management compared to our peers. And in terms of the target segment on the private banking side, when we targeting, we focus more on the professionals and business owners. So obviously, UOB, we have exposure to SME clients, for example, which deal with us for their business. Then we can also manage them on the individual side for their wealth, personal wealth. So that's where we come in as well in terms of offering this kind of product. And we want to help them because they already take so much risk doing business. For the wealth side, the personal wealth, we want to make it is a bit more conservative. So we offer a range of solutions from like the protection itself, life insurance and all those. Also then the investment, more like money market funds or fixed income products. So we do those kind of offerings as well across the board, tailored to the different clients' needs. So hopefully that I kind of answer the question.
Yes, thanks so much, Priscilla. So moving from the wealth business, next is a question on your insurance business. Observation by Mr. Alan Wilson that your insurance business might be smaller than some of the other peers. Any plans to be expanding your insurance business?
Okay, so unlike some of our other peers, we don't actually have a insurance arm as a subsidiary of UOB. So our bank assurance approach will be to market external parties insurance product. So I think at UOB we have this partnership with Prudentials across many years. I think we've just renewed another 15-year kind of partnership with them. So we typically market their products to our clients. So when we talk about bank assurance, is more that we sell the partners kind of products rather than we manufacture the insurance products by ourselves.
Okay, moving back to the discussion around the trade tariffs, question by Mr. Lee. I think what we have also observed is the spike in US government bond yields. This was an anomaly given that usually the bond yields would go down during a period of market uncertainty. But we have actually seen the bond yields going up in recent weeks. So I think the question is around what is the exposure that UOB has to US Treasuries in terms of some of the longer term securities, and any concern if both the US Treasuries as well as USD were to decline.
Okay, so in terms of exposures to US Treasuries, I would say it's not significant for UOB because we don't operate in the US. Our securities portfolio currently about 15% of our total assets, so it's not exceptionally large. And in line with like local and global peer commercial banks, I don't think that this 15 numbers is very big. So the portfolio itself consists mainly of high quality liquid assets, and this is for regulatory purpose that we have to have it. right? So it comprised government securities, but mostly from Singapore as well as our regional markets. So as for the direct exposure to US Treasury, we don't have a big exposure there. So I think overall impact in terms of from the recent spike of US Treasury will be quite limited to UOB.
Okay, then another related question then to the FX exposure to some of the ASEAN currencies. I think recently we have seen quite a bit of volatility in terms of movements within some of the regional markets. How will some of this weakness in regional currencies relative to the Sing dollar affect UOB?
Yeah. So most of our books are naturally hedged. In terms of our loan book, the mix by currencies is currently consists of 50% Singapore dollars, then 20% in USD, and 30% in ASEAN currencies. So when the ASEAN currency generally weaken is usually against US dollars. So this in a way also offset one another. And the reason we don't hedge the ASEAN currencies artificially is because it is not liquid and it is very costly. So yes, from time to time you will see that when rupiah or ringgit depreciates, then our profit contribution from the ASEAN subsidiaries will be longer. But hopefully, because there's like inverse correlation between these ASEAN currencies and US dollars, hopefully it should be compensated by profits from the USD loan book, which should strengthen. And then also just to highlight that our local subsidiary, each one of them is self-funded. So meaning that if there is no local currency deposit, there is also no lending. So the deposit always comes before the lending. And they are naturally hedged, so there's no mismatch in the currency, so it's quite safe. That's all maybe what I can share in terms of our FX strategy with regards to the ASEAN currency movement.
Okay, this question by Mr. Huang relating to your question earlier around the potential for higher non-interest income with the current market volatility. The question is whether UOB treats and generate trading income for itself, which I suppose is a question around your proprietary trading income.
Yeah. Okay. So yes, we do have a little bit of those, but although I would say it's not a very big focus for us. So our treasury income, so we call it a TNI, meaning stands for trading and investment income. The half of it is usually customer related flow. And then the other half is a combination of our excess liquidity. We make use of it to trade. So it's quite balanced. I mean, in terms of the overall income source, it's not a very big contributor from this proprietary trading. Because we understand that it can be volatile. I mean, depending on the market movement. So we rather focus on growing, the customer related flows. And this may be, the kind of structured products that we offer to the wealth customers in the say private banking space that will be recorded in there as well, and it may also relate to like FX and rates hedging demand for our clients, so it's also recorded in the customer flow. I would say that the proprietary trading side is not our main engine growth driver. Yes.
So earlier we split it up between some of the short-term impact and long-term impact. So I think we have discussed some of the short-term impact from the recent trade tariffs and the opportunities and risks coming through. The remaining questions relate more to your long-term plans. The first question, again from Mr. Huang, what are the plans around succession planning at UOB?
Okay. Yeah. Okay. So our CEO, Mr. Wee, I think he has been CEO for the last 18 years or so, and he has been with the bank for 40 years. This is a topical question from our investors, actually, be it retail investor, be it institutional investors, everybody asks. So, in terms of succession planning, yes, we do have a plan. Internally, there's a group of personnel that Mr. Wee identified, his one downs, who has the same values of running the bank. So this is very important for the successor of UOB leadership. And these successors get rotated across the business. So they have a well-rounded experience of running the bank. And the senior management KPI, I think, is not just based on performance, but 50% is also based on value. So Mr. Wee does place emphasis that regardless who will succeed, these UOB values have to continue. The philosophy and culture that we have cultivated over the years has to continue. And to give investor peace of mind as well, so any successor of Mr. Wee has to meet the criteria that regulator needs to approve. So it has to go, the process has to go through MAS, and we don't just pick somebody to just be the next CEO of the bank. I don't know whether Jasmine wants to add anything.
So I think just to add on, right? So senior management appointment has the succession planning is always an ongoing process. I think in 2024 you will have seen that we have revitalized a few new members to our senior management team, namely the head of group retail, Miss Susan Hui, the head of group technology, Mr. Lawrence Ho, and also our CFO. I think many of you will have known Mr. Lee Wi-Fi, our previous CFO. He will also be taking a smaller role, and Mr. Leong Yong Chi will take over his role as a CFO after the AGM. So I think all in all, we have this all planned, and our new leadership will continue to profile the same kind of UOB values going forward to continue to deliver all this sustainable value for all our shareholders.
Okay, one of the points you mentioned earlier was driving more transactions digitally through tomorrow. This question from Mr. Huang, he noticed that the bank has been generally reducing its physical stores. The question is this a strategic move to be going more digital? And also, is UOB then also focusing more on high net worth individuals?
Okay, so in terms of the move to maybe collapse some of the retail branches, yes, there's been ongoing, I think, not just in Singapore, but also in the region, especially after we acquired the Citi Group Consumer Banking franchise in the 4 markets, because we saw there are some overlaps in terms of the branches. So we may want to rationalize and streamline some of these. So this has been always ongoing. Now, the value of branches will still be there, so we cannot eliminate completely, even though we are shifting more towards digitalization, meaning customers can use our digital banking app tomorrow to do a lot of things without going to the branch, right? But I think the retail branch will still be there, but their purpose will be a little bit different. So they may not serve those transactions that can easily be done on tomorrow, but they will serve more the higher value kind of ticket items. Say, for example, if customers want to transact wealth management deal with us, right? If it's like a low value, you may be comfortable in like purchasing the funds through your mobile app. But when we talk about a greater amount, like especially if it's like a few $100,000, like even 1 million and above, then the clients may want to visit the branch, right? That's where I think the branch will add more value. So we have been repurposing some of these branches. So more area will be dedicated to serve these private wealth clients if they want to transact more higher ticket value kind of deal with UOB, rather than simply going to the bank for doing transfer or those that can be easily be done via the app.
And I just want to add that we are not only just focusing on high net worth. I think it's also for customers across all segments, from the mass market all the way up to the high net worth. I think the trend that you are noticing is really indeed part of the broader shift for the banking industry. Like, I mean, if you ask yourself, when was the last time you actually stepped into the bank to do a bank transaction? Normally, if you want to go to the bank, it's either even now opening a bank account doesn't require you to physically go to a bank branch already. So I think it's really more of the kind of transaction whereby you really need to speak to someone for advisory service. So I think that's how we are repurposing our bank branches, but not just targeting just the high net worth. I would say it's actually across all our customer segments. whether, is it mortgage or whether, so it's more advisory rather than transactions, the basic banking transaction.
The last two questions, the first one is around your dividends. I think many shareholders who have joined us today are appreciative of the dividend payout. So the question is, will you be offering scrip dividend option this time round?
So we are not offering scrip dividend. If you look at our dividend history, right, the last time we offered scrip dividend was, I think, in 2020. And the reason why is because if you look at our capital position, I think Chris mentioned just now with the implementation of Basel IV, our capital position, I mean, not just us, but the banks in Singapore as well, our capital position has been very strong. So we will not be offering scrip dividend, but for UOB, you'll be very surprised to know that we will have a special dividend payout for the full year 2024 dividend payment. So we are paying out a basic of, we are paying out 92 cents plus a special dividend of 25 cents. So we will not be having scrip. I think, in fact, we haven't had scrip for the last few years because of our strong capital position.
And maybe just to round up today's discussion, really going into the long term, this is a question from Kelvin. So where do you see UOB in the next 5 to 10 years?
Okay, so I think our medium to long-term strategy remains. So as I mentioned, for the wholesale banking side, we will remain focused on the connectivity business. So in terms of the financial shape, we will move away from just providing traditional real estate backed lending towards, giving customers a more holistic kind of offerings for the corporate that transact cross-border. So be it the trade financing, or cash management kind of support and the supply chain management. So this will generate us more fee-based income rather than just loan income. So that's probably on the wholesale banking side. And then on the retail banking, as I mentioned, wealth and cards will be the main growth drivers. Of course, mortgage will also still be there, is our anchor product. And also deposits, we will focus. But I think wealth and cards are the area that we see more growth will be coming from. Not just a high net worth individual, but also, across the spectrum, there's a growing affluence of the consumers in Singapore and also ASEAN. So we would like to capture this. And we always beef up our wealth management offerings through like digital, through advisory programs from our RMs in the private banking side. So it's a complementary of all those. And the card business, you can expect more offerings from us in terms of maybe in the entertainment space, travel and dining. So these are the areas of focus because after we acquire CT, you can see that our card fee income has been growing and we would like to grow it even further. So in terms of our financial shape, the mix may be to aim to grow the more non-interest income side, so the fee-based income, which we think that it will be more resilient, more diversification of income and drivers, because when interest rates are lower, this fee-based income can offset the loss in interest income, as margins may go down during the period of lower interest rate. So hopefully it means that we are moving towards a more resilient business model.
Yeah, I just want to add that so I think it is not the first time. UOB, we have a rich heritage. We have been around for 90 years. So it's not the first time we experience such volatilities and also external shock. And we also remain very optimistic about the long-term growth prospect of ASEAN. So ASEAN is here to stay for us as a long-term strategy, given its strong fundamentals like what Chris highlighted earlier. Although it has also weathered many crises before, so we strongly believe in the riding together with ASEAN out of this and also towards more positive future. And I think I just want to say that right now we are committed to standing by our shareholders, our customers, to also help them navigate these difficult times, to grow together in the dynamic times. Yeah, thanks.
Thanks so much, Pris and Jasmine. Do you have any final words for our participants tonight?
I think just a closing remark. I mean, we've always welcomed this kind of investors engagement. So feel free to reach out to us, be it through SIAS or directly to our investor relations. We do have a email that you can see in the website. So if you have questions, we can help to also answer. And hopefully this session give you a little bit of color of our strategy of our growth drivers into the future. So hopefully you will be more comfortable in investing in us after this session. Especially, I mean, there could be some opportunity given the market movement in terms of the share price is quite fluctuative. So you might want to collect some of our stocks. Yes.
Yeah, and thank you, SIAS, for the opportunity and for having us, as
Okay, thanks
always.
so much,
Thank
Chris
you.
and Jasmine. We definitely learned a bit more about your short-term reactions to the recent market volatility, as well as the longer-term strategic plans. I'd like to thank all the participants who have joined us tonight for the Corporate Connect session. We hope you found it informative, and if you would like to rewatch the webinar, you can find this on SIAS YouTube channel. The Corporate Connect is a SIAS bi-weekly webinar. You can visit the SIAS website to be able to get updates on the upcoming investor education programs. The next Corporate Connect will be in 3 weeks' time, and that will feature CapitaLand China Trust. So with that, I'd like to thank you once again for joining us tonight, and I hope you have a very pleasant evening. Thank you so much.